On to pharmaceutical, it was a big day. We had big numbers from Ranbaxy and Biocon. The big USP for Biocon was the listing of Syngene, which is going to happen this year. For Ranbaxy, a bit of a disappointment when the numbers came out, but the larger picture, the bigger picture, got pretty much clearer once the press conference happened, where Malvinder Singh clearly said the big pipeline is going to kick in very soon.
Everyone likes to stay away from medicines, but in the stock markets these days, that's just what the doctor has ordered. Ranbaxy, Biocon and even small firms like Orchid are picking up business momentum and depending on new emerging growth markets for profitability. For Ranbaxy, revenues grew 5.7% to about 1,800 crore rupees. And the profit beat expectations at 188 crore rupees, mainly led by high margins on some products.
We've grown our margins in 2007 well to 16.5%. We're looking at EBITDA margins between 17.5 to 18%.
Ranbaxy expects to be on a growth path and hopes to demerge the research business to cut costs. It sees the 2008 top-line growth between 18 and 20%, and it also sees 2008 PAT growth at 25%. All this will also depend on the $1 billion first to file that Ranbaxy will announce in a week's time.
We have also continued to leverage our very strong first-to-file intellectual property assets. Today we have close to 20 first-to-file products with a market value of over $27 billion.
Things are looking up for Biocon as well, which is now set to list its contract research subsidiary, Syngene.
We've been looking at listing Syngene for a while, but I think it was important for us to gain critical mass. And of course, we believe that this is the time for us to look at that listing because the BMS deal has actually allowed us to look at positioning Syngene in a very different way.
The PAT was flat at 54 crore rupees, thanks on account of lower licensing income and the absence of the enzymes business, which it sold before.
We are really seriously looking at this, and I think we should be quite close to announcing this kind of an acquisition in the near future. We are fully aware of the fact that we need to, build a front end for our business, especially in the developed markets. And I think we are looking at it very seriously, and hopefully we'll be able to make this announcement very shortly.
But an acquisition may become the immediate positive for the stock.
The first of the earnings from the pharma space have not been bad, but they haven't been very exciting either. So moving ahead, what should investors look out for in this space? Stable growth returns, definitely a given. But if you're looking for a stock which is going to give you the returns, then this is a space to watch out for. 180-day exclusivities, high wow special listings, and of course a lot of litigation. In New Delhi, Samni Mattu for NDTV.